Let's talk about Starbucks now, which is a coffee and prepared foods retailer with stores predominantly in the USA, Europe and China, recently opening in South Africa.
Yeah, we could have picked any of the big global fast food chains, McDonald's, we could have looked at Yum Brands, which is splitting itself, we could have looked at any of those like KFC, which is part of Yum, and all sorts of other global players. But for one reason or another, we decided to pick Starbucks. Why? Because we own them in our portfolios.
Yes, we do. Market cap here of $77.4 billion US, PE of 27.8 and a dividend yield of 1.9%. This is the success story.
Yeah, I mean, this is just a stunning business model. And in terms of growth going forward, you'd think that, okay, well, there's a Starbucks almost anywhere in the world now. You've got Starbucks coming to South Africa through Taste Brands, which we'll talk about a little bit later. But how much coffee could people possibly consume? And is there scope for further growth in coffee? And these guys are saying, well, it's not only coffee and coffee products that they're selling now. They are diversifying into the food space. They are forcing people, or not forcing people, but allowing people to visit a Starbucks outside of the morning rush. So by including lunch meals and the rest of it, they're getting more footfall. The basket size is increasing. They're also selling Starbucks products into grocery stores and the rest of it. So it's just a really well-run company.
Let's talk about the power of the brand here. Paul, let's just say we had 3 stores lined up, a Vida E, a Monkeyland and a Starbucks.
Yeah.
Which coffee shop will you visit?
You mean here in South Africa?
Yes, let's just say, hypothetically speaking, I'm trying to ascertain the power of the brand with a little experiment.
Look, I think Vida is a great presence in South Africa, and that has done especially well. So I think they're the market leader in the sort of gourmet coffee arena, but they're going to be coming hard at them. Certainly Starbucks is in its infancy. Famous Brands has got those things like Paul bakeries, which are going to be coming into this country, and then a bunch of other coffee-related brands.
As a personal preference, which one would you choose?
Well, currently I go to the Vida just outside of the JSE after this each and every show recording, and that's great. But
if there was a Starbucks right
I've
next
actually
door?
sent emails to the management team of Vida to say to them, what about you and Starbucks? What is happening there? Because it would be a great combination. But obviously, Vida is owned by a bunch of private equity and other interests which are looking to just keep going and growing.
I know when somebody's not going to answer my question. He won't decide between those two coffee brands.
I love Starbucks in Rosebank. I'm a happy supporter of that store too.
Chantal, in terms of the US portfolio, as Paul has alluded to, Starbucks is a core holding for us.
Yeah.
Would you celebrate that investment decision?
No, absolutely.
Hasn't done especially well. We should look at the share chart while you're talking. It's kind of come off the boil there a little bit at the end.
So the company has been doing well, and if you look at their earnings and their margin expansion, all the potential that we're talking about, there's still a lot of scope for growth. They haven't disappointed the market. It just seems as if there's just been some broader weakness in the US market, some concerns about labor participation in particular, and then just kind of consumer oriented counters really suffering the consequences.
What you're saying is that the downside isn't particular to Starbucks.
No, so my sense is, I haven't looked at the other ones, but my sense of it is that that it's kind of a broad-based consumer concern rather than Starbucks specifically, because this company has delivered on all expectations in terms of revenue and margins.
You're nodding in agreement?
Yeah, just 2 things to quickly mention. China is very important to this company. It's probably the preeminent luxury consumer brand in China. You know, McDonald's and Yum Brands have been there a long time, but those are more sort of American brands. Starbucks performs particularly well in the Chinese market because it's seen as a really premium product, and they run the stores very well. So they've really done a lot of aggressive expansion there. That's the one thing. The other thing is mobile ordering. This company is the market leader globally in using a mobile app to do ordering when you're on your way to the store. They've rolled it out the best, and it's got, I think, about a quarter of their current sales coming through that channel.
So on trend with the digital wave that we see.
Yeah, absolutely. It's just, you're not wasting your time standing in a queue anymore. You're putting in your order, you're paying with your credit card. It's like Uber for coffee, but you just walk past the Starbucks, which is on every second corner in the US.
I like that analogy, hot or not.
Well, I mean, it doesn't look very, very cheap. So if you look at the forward PE rating, that's about 24 times. Doesn't look very, very cheap, but this is a high growth company with a lot of potential. And if you look at just the prospect that they still have in China, I mean, it's only 13% of their sales right now. It has to be a hot from a long-term perspective.
Hot or not, Paul?
Yep, hot for me. Happy to own it, happy to buy it at these levels, and it's looking cheaper than when we bought it.